Hello, Oracles. Well, this morning we got a little bit of a pullback in Tesla stock, making people wonder, are we going to continue pulling down? Then from there, we just took off, and at the end of the day, finished at almost the day highs. So, what caused this surge today? What can we see going forward this week with the FOMC meeting in the next 2 days? And some other little nuggets of information about Tesla that we're going to get into in just a minute. All right, so looking at the charts today, again, finishing up 3.5% at 269.06. So the RSI is rebounding right in the middle now at 53.37 on the daily. And again, if we look at the 30-minute chart on the day, we started low. I mean, we hit a low of the day at 254.12 and then surged up from there. The good chunk of early morning volume, as usual in the first 30 minutes, last 30 minutes, a little bit of a chunk of volume, but this nice push as we went through the course of the day was really nice to see. And now, if you remember, last week we had the rebalancing of the NASDAQ 100. So we saw a bit of a sell-off going on due to the earnings that were going on and that whole entire rebalancing there. Now here we are, surging back up again. Seems like a lot of that money that got freed up on Friday from all of these bonds expiring from these institutions, they've now put that money into play. So we'll see how this continues forward. Again, we have the FOMC meeting on Wednesday. It begins tomorrow. We get on Wednesday what their decision is going to be for rate hikes. I am still thinking that we're going to see a 25 basis point hike. Now, we have been seeing inflation coming down as far as a headline number goes, but the core numbers are still a little stickier and much higher. So there's kind of a disconnect there. So it seems like the Fed will still need to continue raising rates. How is the market going to react to this? You guys can let me know in the comments below what you think we're going to get and how you think the market is going to react. And now today, Tesla did release their 10Q filing. So just a couple of points in here. One of them is the deferred revenue. Now, this is something that I had thrown into my valuation model, and this refers to FSD and other things. I'll read it out here. Deferred revenue is related to access to our full self-driving features and ongoing maintenance, internet connectivity, free supercharging programs, and over-the-air software updates, primarily on the automotive sales, which amounted to $3.17 billion and $2.91 billion as of June 30th, 2023 and December 31st, 2022, respectively. Deferred revenue is equivalent to the total transaction price allocated to the performance obligations that are unsatisfied or partially unsatisfied as of the balance sheet date. Revenue recognized from the deferred revenue balance as of December 31st, 2022 and 2021 was $256 million and $121 million for the 6 months ended June 30th, 2023 and 2022, respectively. Now, for me, in my valuation model, I factored in $100 million for FSD. So now they're saying that they recognized $121 million for 6 months, so the first half of this year. So according to this, it looks like they recognized $256 million for the first 6 months of this year. If they split it equally for each quarter, that'd be about $128 million for each quarter. So I was a little bit shy with my $100 million coming in. Of the total deferred revenue balance as of June 30th, 2023, we expect to recognize $747 million of revenue in the next 12 months. The remaining balance will be recognized at the time of transfer of control of the product or over the performance period. So, over the next year, they are looking to recognize $747 million in this deferred revenue. So to me, that one there was important because this is them recognizing all of that FSD revenue. And again, once they get themselves to, full self-driving and it's actually regulated and automated, they can recognize that sooner and they don't need to wait on it. Another little key piece is we are focused on growing our manufacturing capacity, which includes capacity for manufacturing new vehicle models such as our Cybertruck and next generation platform, and ramping all of our production vehicles to their installed production capacity, as well as increasing production rate and efficiency at our current factories. The next phase of production growth will depend on the ramp at Gigafactory Berlin, Brandenburg, and Gigafactory Texas, as well as our ability to add to our available sources of battery cell supply by manufacturing our own cells that we are developing to have high volume output, lower capital and production costs, and longer range. Our goals are to improve vehicle performance, decrease production costs, and increase affordability and customer awareness. So the pieces out of this are them saying that, yes, while we are looking at having Mexico coming online, as we've been discussing, Berlin and Texas still haven't hit that sweet spot when it comes to the ramp yet. That is going to be happening in the next year. When those hit that sweet spot, then we can start focusing on where's Mexico, how is the Cybertruck ramp going, where is energy at. Those are the next key pieces, but we still have a focus on Berlin and Texas getting ramped. Now, they also, of course, discussed decreasing production costs, which they have been doing, increasing affordability, which they've been working on, and because of the interest rates, have decided to go with an 84-month financing program, which definitely allows them to get more customers coming in without having to cut prices as much because it mitigates some of that interest that people have to pay. Even though the interest rates are higher for that 84-month, it allows a lower monthly cost to customers so they can come in and buy that vehicle on a more monthly affordable basis. So that's what they're doing there. And then customer awareness, as we know, they have done a little bit of advertising, and that's really what it's about is customer awareness. Can we get customers aware of how affordable Teslas actually are now? What they can actually do? A lot of the questions of, hey, I've got range anxiety. How can I help overcome that? That customer awareness will be big. And then, of course, they put in the caveat here. These plans are subject to uncertainties inherent in establishing and ramping manufacturing operations, which may be exacerbated by new product and manufacturing technologies we introduce, aka Cybertruck and the next generation platform. The number of concurrent international projects, any industry wide component constraints, labor shortages, and any future impact from events outside of our control. Moreover, we have set ambitious technological targets with our plans for battery cells as well as for iterative manufacturing and design improvements for our vehicles with each new factory. And now for energy, the long-term success of this business is dependent upon increasing margins through greater volumes. We continue to increase the production of our energy storage products to meet high levels of demand, including the announcement of a new megafactory in Shanghai, which we knew about. For Megapack, energy storage deployments can vary meaningfully quarter to quarter depending on the timing of specific project milestones. For Powerwall, better availability and growing concerns over grid stability drive higher customer interest. We remain committed to growing our retrofit solar energy business by offering a low-cost and simplified online ordering experience. In addition, we continue to seek to improve our installation capabilities and price efficiencies for Solar Roof. As these product lines grow, we will have to maintain adequate battery cell supply for our energy storage products and ensure the availability of qualified personnel, particularly skilled electricians, to support the ramp of Solar Roof. And now here's the big one: cash flow and capital expenditure trends. Our capital expenditures are typically difficult to project beyond the short term given the number and breadth of our core projects at any given time, and may further be impacted by uncertainties in future global market conditions. We are simultaneously ramping new products, building or ramping manufacturing facilities on 3 continents, piloting the development and manufacture of new battery cell technologies, expanding our supercharger network, and investing in autonomy and other artificial intelligence enabled training and products. And the pace of our capital spend may vary depending on overall priority among projects, the pace at which we meet milestones, production adjustments to and among other various products, increased capital efficiencies, and the addition of new projects. Owing and subject to the foregoing as well as the pipeline of announced projects under development, all other continuing infrastructure growth and varying levels of inflation, we currently expect our capital expenditures to be between $7 and $9 billion in 2023 and in each of the following 2 fiscal years. That's huge, and I'll get into that in a minute. Our business has recently been consistently generating cash flow from operations in excess of our level of capital spend, and with better working capital management resulting in shorter days sales outstanding than days payable outstanding, our sales growth is also facilitating positive cash generation. We have and will continue to utilize such cash flows, among other things, to do more vertical integration, expand our product roadmap, and provide financing options to our customers. At the same time, we are likely to see heightened levels of capital expenditures during certain periods depending on the specific pace of our capital-intensive projects and other potential variables such as rising material prices and increases in supply chain and labor expenses resulting from changes in global trade conditions and labor availability. Overall, we expect our ability to be self funding to continue as long as macroeconomic factors support current trends in our sales. So, now the big piece about that last one is they have already told us numerous times that the macro environment is very difficult for them at the moment. And they are still able to do all of these projects and still have cash flow coming in on top of it all. That is huge. So, if they can continue to do that in basically a worst case scenario situation, things are looking pretty positive for the future. And they reiterated the $7 to $9 billion in capex spending. This is what we had learned about last summer. They are still holding to that over the next 2 years. Now, thinking about the growth that we are going to be seeing in revenue coming in, if they're still going to be having the same CapEx spending, that means that they can look at other areas to spend this money, maybe do a buyback. I don't know. But that just means that if that is going to be their CapEx spending, as long as the macro environment doesn't change drastically, we may see pockets of more spending. Like this quarter, we saw quite a bit more, especially when it came to the Cybertruck and AI and focusing on Dojo, things like that. We may see pockets of that, but as Berlin and Austin continue to ramp, those costs will continue to come down. That means that that capex spending goes into other projects like Mexico, India, next gen platforms, AI, FSD, all of these other things that they can focus on and still have more and more revenue coming in on top of all of that. Very awesome and bullish things going for the next 2+ years just based upon this information. And if they can continue that moving forward and we come out of this difficult macro environment, that sets them up for an extremely bullish run when we pull out of this. And so that was it. Some of the key points that I wanted to go over in the 10Q. If there's anything that you guys had noticed in there, please mention it in the comments below. Those are just a couple of things that I really had noticed that stuck out to me that I wanted to share that they didn't go over a lot of in the earnings call. Now we're going to jump over to X, formerly known as Twitter, and discuss some things that were shared over there. So we're going to take a look at some key little pieces of information. It's not huge news, but like when you look at it at a fundamental basis, it's just Tesla lining up little things here and there, really setting up their foundation for growth in the future. So the first one coming out from Sawyer Merritt, news. Tesla is planning a big flagship delivery and service facility to handle most new cars shipped from the United States and China to Greater Vancouver. So we're getting a lot of these places set up. Now here we go in Canada, getting even more of these service facilities set up. And then we've got another one from Sawyer Merritt. News. Tesla has just added a big law attorney to their ranks. Frank Brannon has joined Tesla as Associate General Counsel of Litigation. He comes from Louis Brisbois, Bisgard, and Smith. Tesla has now added at least 6 big law attorneys since summer of 2022. This goes back to when Elon tweeted out that they were looking to bring on some serious litigation counselors, and they continue to do so. And then we've got a tweet from Open Skies. Tesla set to meet India's Commerce Minister this month to discuss plans to build a factory to produce what the company has described as an all-new $24,000 car, a person with direct knowledge of the matter told Reuters. Now, this is the second time we have heard about this, so again, this goes back to what we were talking about with Mexico, having that next-gen platform. It's talking about that $22,000 to $25,000 vehicle. This sounds like it's going to be pretty much the same thing coming out of India, so all of these rumors kind of circulating around tells me that it's probably realistic, and we haven't gotten any confirmation from Tesla yet, but this is just another little piece that is going to solidify some of these rumors that have been circulating. So very much looking forward to getting finalized information from Tesla, but we probably won't hear anything about that, I'm guessing, until probably Q1 or Q2 of next year. So overall, it was a great way to start the week. Anybody who bought the dip, go ahead and share in the comments below. We dipped down to that $254 level, shot back up. I did add to my TSLY last week. I added a little bit more to Tesla as well. Very excited about that. Where we go from here, who knows? Again, FOMC meeting over the next 2 days. That could spook the whole market. We do have Microsoft and Meta reporting earnings this week. And then next week, we're going to have Apple and Amazon. So some big earnings going on over the next couple of weeks, plus the FOMC meeting. So not sure how the market is going to react to all of this, but just kind of knowing that we're going into August with a lower volume month. August typically isn't the best month, but hey, you never know what's going to happen. So I'm ready for anything. If we keep going up, I'll be super excited. we shall see what happens. So thank you guys all so much for watching. I appreciate all of your support. Have a great one.